you want to have access to the latest technology that lets you be one step or even a few steps ahead? When you trade gold CFDs, be like me. Trade with XTB. Do you want to have access to the latest technology that lets you be one step or even a few steps ahead? When you trade gold CFDs, be like me. Trade with XTB. want to have access to the latest technology that lets you be one step or even a few steps ahead. When you trade gold CFDs, be like me. Trade with XTB.
Hello everyone, my name is Vahe and I'm Senior Account Manager in XTB International. Can you hear me?
Vahe. Hello Vahe, how are you?
Yes, I'm good. How are you doing?
I hope all is good. First, thank you for being with us. Let me introduce you, Vahe. So Vahe, Vahe Petrosian, he's a Senior Account Manager at XTB International. Now you are at the office, I can see, because I was there. You are at the office in London.
Yeah,
so thank you for being with us. Thank you for all who are watching us now. And I want to introduce Vahe and what he will be talking about. Yesterday, as you know, I had Lamis as a guest with us, and we talked about the game that you are launching for subscribers in this event. And today we have Vahe. He will be explaining with us. He will explain with us the X station, I think, and
yes.
You have much more to say for the next 15 minutes. So the floor is yours.
All right. So I would like to share with you my screen so I can show you everything. Sure.
So let me make you go. Okay.
Okay. Just give me a moment. There is some security. Okay. All right. Can you see my screen? Great. So okay, I think you can see me right now. So let me share my screen so you can have a look what I can see. All right, so this is our platform, and basically, as you know about XTB, we're leading global trading brokers. We leverage up to 500. We have standard Islamic accounts and over 500 global markets, including Forex, commodities, indices, cryptocurrencies, CFD stocks, and CFD ETFs. So we are highly regulated, and I want to show you our award-winning platform, XStation 5. So in order to access, if you have a demo account, you can click on the login here and click on the XStation 5 real demo. So once you click here, you just log into your account, and here you go. So this is the platform. The first time when you log in, that's what you see right now. Okay, so let me show you straight away about the Market Watch. So the Market Watch, it shows you basically all the instruments that we have. It's categorized. It shows as Forex, major, minor, etc. We have indices showing also by categories, commodities and cryptocurrencies as well, CFD stocks, and as you can see, we have everything categorized by the country, so it's going to be easier for you to find out what you're looking for, as well as CFD ETFs. So if you want to trade something, if you want to have an idea, look for the instrument, you can basically find this way. Euro USD, if you click there, it shows you all the basic information for the platform, sell, buy, lot size. And if you want more information for every instrument, you simply click on this instrument information icon. This way, it will open a separate window showing you the market hours. It will show you the leverage. For in my case, my account is up to 200, but by standard is up to 500. And you have all the necessary information right now here. You can see from the platform. If you want to open a position, you can simply click buy or sell. But if you want to see more information, of course, before doing that, I want to introduce you our real-time calculator, which when you click on the plus sign, it opens a separate window showing you a real-time calculator, showing you everything you need to know before you open the position. So we have the volume. You can adjust the volume size from micro lot to, I don't know, one standard lot. And when you do that, it will show you basically the margin requirements that you need in your account, contract value, spread. It all shows in real time. So once there, you decide to open position, it shows you the commission, pip value, daily swap. It shows you everything. Everything is very transparent. So you don't need to calculate yourself everything. And this is much easier way. So we have the stop loss and we have the take profit if you want to choose. And you can simply choose the price if you want, and you put the preferences that you like. But here I will not put at this moment. I will just show you first of all how to open the charts. So when you drag and drop here, it will open the charts of the instrument you want to trade, which is Euro USD at the moment. So you can see the chart, and if you want to open the position, you open the position as you prefer. And you can see right now in front of my screen, below we have the open positions. So here you can see the instruments that you opened and the positions which are open right now. And the good part, the good thing I can show you, let's say we open another instrument, which will be US 100. Here it is US 100, but maybe you're not sure about, because sometimes it says NASDAQ, sometimes US 100. And if you don't see here NASDAQ, you can just simply type in the search and here you go. It will show you the instrument that is related to NASDAQ. I mean, that it is, And we want to open this position with one standard lot, and we will go, for example, long position. Again, drag and drop. And now we have two charts, okay, and two different positions. So right now, let's say if we want to close US 100, but partially, in order to do that, you just right click on the position and you choose the partial close. So I don't want to close the whole trade. I want to close half of it, 0.5. I will do that, close, and here you go. We have closed our position, half of it, and we still have 0.5. This is something many brokers don't have, but we actually have it on our platform. That's very useful and very, something that people actually demand to have. And that's one of the parts of the position side here. And if you want, you can close everything by clicking here, close all, or you can close only profitable ones or close all the losing. So at the moment, we're all in negative, but if I close, we will close the positions, and it's simple as that. Another very, very useful feature is if you have more than one chart, if you have even 10 charts on your screen, but you want to see everything in real time. So to do that, simply click this button, and here you go. You have both charts available in front of you. We can have up to 16 different, 16 different charts at one moment on your screen, which is very useful. So of course we have our stop loss and take profit. So we're just going to open the position. You can of course click here. You can click on the plus button and put your take profit and stop loss positions before you open the trade. Other thing what you can do is simply dragging the take profit and stop loss. So it's very, very simple. So you don't need to worry about figuring out how to do that. And as you can see, the platform itself is very customizable. So you can do a lot of things. You can change the chart colors. As you can see, I have white and blue. Candlesticks, my favorite is Heikinashi, which I'm using always if I want to trade. And we have a lot of indicators which you can find here. And again, the same, if you want stochastic oscillator, you can simply type here, just give me a moment, okay. Stochastic oscillator, that's it, you have it right now in front of you. You can change the colors, you can change some settings here. If you want this feature to be, this indicator to be only in one chart, you simply type apply. If you want it to be applied on all the charts, you just click on apply to all charts, and that's it. Now we have the indicator here on the bottom and as well as here. And you can have again in the same time all the information in front of you. So another thing is to mention is a rollover. So some instruments that have rollover like US 100, and not to make things complicated, so where in advance when the rollover is going to be. You will see this R icon next to the instrument that the position is open. If you hover your mouse, it will show you when it's going to be the next rollover, which is very also useful. So you have this information. We have a lot of different things here, features for the for the chart. And right now I want to show you something as well, which is the news section. So we covered everything in the market watch, open positions, and of course, yeah, we have the pending orders. So if you have opened a position with pending order, you can have it as well. So let's go right now to the news section. So in news section, we have a lot of things going on. We provide a lot of information, as well as we going to show you here the trade of the day, which is very, very nice thing to have a look. If you click on that, you have the information you can read through, and we also have chart of the day. Also very interesting thing to have a look when you want to trade. Another thing, what we also do, we share with you investment bank recommendations, which are Forex signals. And once we have that information, we will provide you here in the news section. So here, we have our professional market analyst. He provides you that information here, and you have the full access of it as well. So right now, let's check the market analysis. And market analysis is a way to find more, things like strategy, let's say, if you're looking for. And the first thing I will show you is the top movers. In top movers, it will show you the worst and the best instruments that are, at the moment. So you can see US 2000 is the worst instrument right now. We can click on the chart and we can see that actually, the chart shows you how it goes, the progress of the instrument. And we can see the other information, the best, instruments that are going well as well. You click here, it will show you that, yeah, it has increased. So it will show you here then, that information. The other thing is the market sentiments. So the market sentiments, it will show you basically an idea how other traders on our platform are doing. So we have Euro USD here, for example, the simple one. We can see that 49.3% people are at the moment going short positions, and 50.7% are going long positions. So that's, you can also, add the specific instrument you're looking for. Let's say you're looking for this one, you will add it here. You don't like it to be on the top, you can simply change the position, but it doesn't allow me at the moment. And as well as, you can customize what you want to see here right now. And another thing is, look, this is, I'm showing you on the demo account, okay? When you have a real account and you want to see, let's say, on volumes, if you click here, it will say it's available on real account. So demo account shows you only, some features. It doesn't show you all the features. It doesn't give you full access to the platform. So once you have a real account, as I do at the moment, so if I change it to the real account right now, and we go again to the market sentiment now with the volumes, you can actually see more information right now. So it's available, when you have a real account. Sugar, for example, you can see that 90.5% of the short positions have more volumes on the short and less volumes on the long position. And again, these things are very customizable. You can change a lot of stuff, and and as you can see now, I can change the positions. Again, if you want the sugar to be on the top of the screen, aluminum to be the next one, you can do that. On the demo I tried, it didn't work, as you could see. On the real account, you can do that as well. So let me also go to the calendar section. Okay, so the calendar is basically, we're going to show you here the most important events. Again, we can see by today, or let's say tomorrow, these things are available. You can view that every time. And you see the impact. So impact, it explains how strong it will impact the markets. So if we have, for example, one of them, let's just choose any, I don't know, let's say ISM non-manufacturing index in February. So it will have a high impact on the markets. So this is the page where you could, have a look to be aware of what's happening on the market. And another thing is, when you have a real account with us, first of all, you will also receive education, because here, as you see on the education section, I am on a real account. You have the premium services. We add a lot of videos, video tutorials that you can have an access. If you have just a demo account, on a demo account you have only basic. So you will receive the Trading Academy of the basic category. Very simple stuff. What is Forex? What is CFD? And it will teach you. But once you have a real account, you have an access for this section as well, and which is very useful for clients, for people who want to become professionals in trading. And when you already trade with us, when you have an account and you're already trading, we also invite you to our VIP club, where we have professional market analysts and the professional traders that will teach you, provide a lot of information, what's happening on the market as well. And we will also, send you market alerts on your WhatsApp. And we will let you know what's going on in the market, and you will also be with senior account manager as me as well, helping you when you have any questions, and we can help you out anytime you like. So that's it at the moment. So thank you so much for watching. I hope you enjoyed the the look of the platform, and if there is anything, just let us know. So thank you so much. Thank you for having me.
So thank you so much, Vahe. Thank you for your. Oh my God. We have the cam. Okay. Okay. So thank you, Vahe, again, and for the session and this explanation. And the platform is X Station from the XTB. So I will be waiting for Raja to enter once again. Okay, so here we are. Vahe, thank you.
Yo, hello? Testing, testing.
Yeah, we can hear you. Thank you, Raja, for being with us today. People are waiting your session
Yeah.
because we had a lot of requests. When is the session of Raja? When is the session of Raja? So I want to hear from you more about risk management. We know your session is about risk management and how we can manage our risk during trading.
Okay.
So first of all, I want to say thank you because I want to say congratulations for your new car.
Oh, thank you.
I saw the story, and for this week we can see that you had a lot of winning trades this week, and I believe many people are just waiting to see how do you trade, what is the way that you trade with, and the risk management you work on. So we will be on YouTube. Any person wants to ask question, you can ask on YouTube. At the same time, Raja, the floor is yours.
Awesome, perfect. So am I able to share my screen?
Yes, one second. I will put you as a co-host. Okay. You should be able now.
All right, let's see over here. Share my screen, okay. I just want to make sure that everyone in YouTube can see me on the, I think on the top right-hand side. Let's see here. I think there's a little bit of a lag here. There's a little bit of a lag here on YouTube, so I'm just going to wait for the screen to kind of like refresh, so I can make sure if everyone can see me. Oh, I don't think the YouTube can see my screen. Oh, there we go. Perfect. Awesome.
Sorry, it's always 30-second delayed.
Oh, okay. All right, awesome. Well, thank you so much, Abdullah, for giving me the opportunity over here to come on here and share some information on your platform. I'm gonna say it's an honor to be here and to give me this sort of a respect for me to kind of like talk about how we do things and how to basically manage risk and manage trades basically. So a little bit of a background here I'm gonna give. Oh, okay, let's keep this light on. So a little bit of a background I'm going to give here about myself is going to be, so when I first started trading, I started trading back in June, I'd say like June 2016. June 2016, I started to trade. And the first thing when we're approached to trading is about like, okay, how you can make a lot of money, right? Because the way I started was because I was looking on social media, like on Instagram, YouTube, all that stuff. And I saw that, okay, well, if you can trade, you can make a lot of money, and I was like, okay, so that's something that I was drawn to, like, okay, like, what, I want to make money and trading is the only way I can make some decent gains and to maybe pay off my debt or something like that. So I started trading. In the start, we didn't really know what was going on, right? So the way we started trading was that, so I'm going to give a quick recap of how we started and what happened and how we kind of evolved into more of managing risk and stuff like that. So when I first started, okay, what's this? I think you guys can change the quality of here. Okay. So the way we started was we would look at the 4-hour candles, right? That's all what we would look at. So let's take a look at USD CAD. So all we would do is we would look at the 4-hour candles and we would see whether the 4-hour candles are creating a support or they're creating a resistance, right? And if the 4-hour candles are creating support or resistance, and okay, let me just fix this one thing over here. Abdullah, can you right click on my video and make me kind of like in Spotlight?
In view, it's speaker view.
Yeah. If you can right click on my video, it's going to say put on Spotlight.
Like this?
No, it's not happening. Okay. Okay, never mind. So so when we first started, so the 4-hour candles, right? All we would do is we would look at the 4-hour candles and we would see that, okay, when is the 4-hour candle coming down to a support? And whenever a 4-hour candle would come down to a support, we would take a buy, we would put like a 10 pip stop, 15 pip stop loss, and we would let that trade run. And what we found was, now since we were trading on the 4-hour support and resistance, we found that there was a very high probability that price was bouncing from those zones and going in profits, right? So we're like, okay, perfect. This is the best way to trade at that time. So we're like, awesome, let's just keep on doing this, right? So we were very, very profitable in the first 2-3 months. But then what happened was, obviously you have Instagram and social media. So what happened was we would look at social media and we would see that, okay, like, you know what, if we're catching 12 pips, 15 pips, and there are people on Instagram catching like 100 pips a day, 50 pips a day, like, 200 pips a day. So we're like, okay, that's what we want. We want to get to 100 pips, 50 pips a day, and let's try to do that. So what happened was, when we started to look into opportunities of like 50 pips and 100 pips, I started to learn about, like, trend lines, Fibonacci's, harmonic patterns, Bollinger Bands, EMAs, all indicators, because I thought that, okay, the more indicators I'm going to know, the better my results are going to be in trading, right? Makes sense, because, like, in our regular life, if we want to get a promotion, or if you want to pass an exam, or even like if you want to pass like a grade, the more we study, the better our result is going to be. But with trading, it was a little bit different, right? Because the more indicators I studied, the more trading instruments I looked at, the worse my result got. And the only problem there was because in the start, when we had one strategy of, like, buying support resistance on the 4-hour time frame, now we were looking at Fibonacci's, we were looking at trend lines, we were looking at Bollinger Bands, EMAs, stochastics. So we had all these systems that we were looking at the same time, without realizing that every system has its own probability of a win and its own probability of a loss. Right? So if you mix, let's say, a Fibonacci strategy with Bollinger Bands, you're mixing two strategies together. You're mixing two probabilities together. So what ended up happening was that we didn't get the results we wanted at the time, because we were so fixated on people making money and big gains on Instagram, we basically forgot our roots, where our trading was. So long story short, what happened was, we would, like, let's say you're looking at a daily time frame, right? We're looking at the daily time frame, and we would take a trade, and, like, we would take a trade. Let's say this is a support. Let's say, for example, we have a support right here, and let's say we took a buy at this time. Price would actually go in some sort of profits, and then price would go deeper in drawdown, and we wouldn't know what's going on. So after the fact, we're like, okay, you know what, this is not working, because obviously we're getting some profits, but at the same time we're going in a deeper drawdown. So we had to look back at, okay, what we were doing right in the start, because in the beginning we were winning trades knowing less, right? So I'm going to repeat this again. In the beginning, we were winning trades by knowing less, which means we were only trading on very basic strategies, right? But once we started focusing on something more complicated, systems like Fibonacci's, trend lines, all that stuff, we started actually losing trades because we were mixing two strategies together. After the fact, we realized that, okay, making money in trading is not everything. Obviously, like, we come to trading to make money, to make gains and stuff like that. Because whenever someone starts to trade, what's the first thing that we're told, right? The first thing we're told is that, hey, this is a $5.2 trillion market. You know, you can trade at any time of the day. You can trade at any pair. You can trade like whatever session you want, right? That's all well and good because there's all this volume in the market and prices moving. And whenever you look at the charts, there's some setup that you can trade, right? But the only problem was everyone said that, okay, like you can make a lot of money, but no one said that, hey, wait a minute. How about risk management? No one said that, hey, listen, you can basically learn risk management first and then aim to make money, right? Because the problem is that everyone is so fixated in getting a winning trade. No one's fixated in knowing that, okay, how to cut down the losses or how to stop the bleeding of an account. Because when you have a new trader, right, they trade, you'll get a, maybe like, you'll get a lucky one trade win, a lucky 2 or 3 trade wins. But at the same time, your luck runs out after some time, right? After some time, you're taking trades, you're taking winning trades, your confidence goes up, you get a little bit cocky, and then you're like, okay, you know what? Perfect. I'm winning trades. Last week, I won a lot of trades. Now I'm going to increase my lot size and then I'm going to win more trades, right? Now, the problem is that you're winning trades, but you don't account for the fact that what's going to happen when you take that first loss, right? We have about 220 people here watching. So I'm going to ask you guys this here. Whenever you take your first loss, what's the first thing that goes through your mind, right? Whenever you take a trade and the trade hits a stop loss, the first thing that goes in your mind is that, no, okay, hold on. We took a loss over here. Let's see how we can make this loss back. That's the first thing that goes through an amateur trader's mind. Let's make this loss back. And I think that's a very immature way to look at the market, because whenever you take a losing trade, that means your analysis was wrong. Right? That means there was something you did not identify in the time. That means there was something you overlooked at the time, which is why you took that loss. Right? So a lot of guys, what they do is like they'll involve emotions. Oh, also, one more thing is whenever someone starts trading, the first thing you want to do is start from a demo account, right? And we start from demo accounts, you know, we start to win trades. That's all perfectly fine, because when you're starting with a demo account, you're starting to analyze trades, you're starting to do your technical analysis. What you don't know is that obviously you're learning technical analysis, but at the same time, I think you're ignoring the emotional dexterity there, which you need to kind of like, you know, manage your live trades. What I mean by that is like on demo accounts, you're learning your technical analysis, right? But on the live account, you're learning how to manage emotions while trading live money. So whenever someone starts, I'm like, hey, listen, if you want to start with a demo account, start on a demo account for about a week, 2 weeks, 3 weeks, right? Focus on that. Focus on technical analysis. But as soon as you're done, open a small account, like a live account, $100, $200, $300, and start trading live. Because sooner you start trading on live account, the better your emotional intelligence is going to be when it comes to money, right? Because I remember when I first started my account, my first account was $200 account. And I started that back in April 2016, a $200 account. And within 2 weeks, I lost that account. I blew that account because I didn't know what I was doing, you know. And when I had my $200 account, I was trading on 1 cent lots. And I can tell you this right now, even with the 1 cent lot loss, a $1 loss or $2 loss, it affected me, right? Because even though that was $2, it still affected me because that was live money, you know. And I quickly realized that no matter how big your account is, even if you're losing $1, that's going to affect you emotionally, because now you have to battle with your emotions when it comes to live money. So that's why I tell guys, hey, listen, if you're going to start with a demo account, start with demo accounts for about a week, 2 weeks, and then move on to a live account with a smaller number, like $100, $200, so that you can start building your emotional intelligence towards like, you know, managing money. And if you have a loss, if you have a losing trade, you try to see that, okay, why did this trade turn out to be a loss? So for example, let's take a look right over here. So what we're going to do is we're going to try to, so let me see if I can annotate over here. I think Abdullah needs to activate. Yeah, I think he needs to activate the annotation to let users annotate. Let's see here. Can I annotate? No? No, probably not. Oh, I don't think he's here. Is he here? Yeah, I don't think I can annotate. Anyway, I think annotation would have been much better, but all right, so we're gonna continue on here. So I'm gonna try my best here. So let's do this. So let's say that we have this opportunity. All right, let me just remove this here. Okay, so let's say, for example, we have this opportunity right here. Yeah, annotation would be much better, but I don't think we have annotation. Abdullah, do we have annotation here? Are you here?
It should be.
Annotation, no. I think you need to allow participants to annotate.
Let me see how.
Probably
I
not.
see this option.
Yeah, I don't think it's here. Record, hide. Yeah, I don't think it's here. Anyway, so let's say you have price come down and it creates like a support right over here, right? You have candles come down and candle close bullish. So whenever you have a candle closing bullish, now you're anticipating the next candle to continue to move up. So let's say, for example, you say, okay, you know what? I'm going to take a buy right over here, and I'm going to put my take profit up to this resistance area, and then what we're going to do is we're going to put our stops below this candle right over here, and we're going to anticipate the price to go up, right? So when you're anticipating price to move bullish, and let's say price starts to come down and it hits your stop loss, most of the time what guys are going to do is they'll say, okay, like, you know what, if price is coming down, let us increase our stop loss, you know, because you get stuck in that analysis that, okay, price has to go back up. And if price comes down, you're increasing your stop, and as you keep on increasing your stop loss, what's happening is your risk starts to get bigger and bigger, right? Because at the same time, whenever you're entering a trade, you have to identify what's your limit to get out of the trade. Because believe it or not, a stop loss is a point on the chart. So if you're making notes, I think this is going to be a pretty good idea to make this note over there. Whenever you have a stop loss is a point on the chart that's going to nullify your trade idea, which means that if price comes to that level, let's say this level is 1.26340, if price comes to this level, that means your buying idea is nullified. So you have to accept that loss. What most people do is, like, they'll take a buy, price will come down, they'll take another buy. They're like, oh, no, I believe it's going to go up. So you'll take another buy, and then you'll take another buy. And then once price breaks the lows, you're going to take another buy. That's not the right way to trade, because once you're taking one position for buys, you have to stick with that. If it hits your stop loss, you're like, okay, you know what? I took a loss over here. Let me see, what did I ignore, right? What did I miss in this trade which made me take a loss? So maybe you can say, okay, price came up and maybe there was a resistance right over here, right? Maybe there was a resistance here which you did not see at the moment, because look, price went up and then it came down. So you need to investigate what happened here on the smaller time frames. So what we're going to do is we're going to look at the small time frame. We're going to look at the 15-minute, and we see that, okay, maybe there was some consolidation here, price broke support and then came down. So if price came down, you need to now identify that, okay, how could you have taken a winning trade at this point, right? So those are certain things that you need to look at then. I really wish there was annotation here. Without annotation, I think it's going to be very difficult to explain ideas.
We don't have annotation and trading view in the tools.
Oh, I think in Zoom, if you go to Zoom, you go to options, they're going to be allow participants to annotate.
I'll try 1 minute.
Okay. Yeah, annotation is going to be very, very better, because trading view annotation is not good at all. It's just garbage. Yeah, it's not going to help at all. Because there are certain things I want to touch base on, and the best way to do that is to have some sort of annotation over here. Yeah, I don't think you have the capabilities All right. So
I
let's
couldn't
look
find,
at, yeah, what's that?
I couldn't find it.
Okay. All right. So let's take a look at another example right over here. So let's bring up like a clear chart, right? So let's say, for example, so this is what I learned when I was starting to like, learn about risk management and drawdowns and stuff like that. So let's say we have a resistance up over here, and then we have a support down over here, right? So for example, now, let's say you have a candle which goes up like this. So let me just change the color of this candle. Let's say this is a bullish candle and it's moving bullish at this time. Let me just move it up over here. So let's say we have a bullish candle that's moving up at this time, and someone gets a smart idea that, okay, since we're coming up to a really strong resistance, let me take a sell over here. So someone's going to turn around and say, okay, you know what, we're going to take a sell at this time. So let's say this is a sell position. We're taking a sell over here. So let's say you're taking a sell at this time, you're anticipating price to come down, and your stop loss is somewhere up over there. So what happens is, instead of price rejecting this area, since this is a bullish candle, what happens is that the next candle starts to move further bullish, right? So now when the next candle starts to move bullish, now I know we have some beginner traders over here too. We have some experienced traders here too. So let's say price goes in profits here, no, in drawdown. So let's say your drawdown goes from minus $5 to around minus $20, right? Your drawdown is at minus $20 at this time. And you're like, oh man, like I took a sell over here. Now I'm in drawdown. I don't know what to do. Maybe I'm going to remove my stop loss, and then I'm going to wait for the next candle. So when you go about your day, you let the trade run. And when you come back to the chart, you see that price has moved up a little bit more. And now your drawdown, instead of minus 20, is minus 50, right? So once you have a minus 50 drawdown, you're like, oh my God, now I have to wait. I have no idea what's going on. So what's going to happen is, now what you do is you're like, okay, you know what? Let's just wait, because price has to come down. It can't go up all the time. And what most people do at this time, when you're in a deep, deep drawdown, the worst thing you're going to do is you're going to look at the higher time frame, because you look at the higher time frame and then you're like, okay, you know what? This is a swing trade. Even though if you took the trade on a 1 hour time frame or a 30-minute time frame, you look at the 4 hour and a daily, you're like, okay, now I'm in a swing trade, but you don't know your risk management, right? So what happens after this, after a while, you look at the candles and you're like, okay, candles are coming down at this time. So once candles start coming down, you see that your drawdown is actually reduced to, let's say, negative 15. So once your drawdown is at negative 15, you start to think that, okay, you know what? I started with my drawdown at minus 20. It went up to minus 50. Now candles are coming down, and now my drawdown is at minus 15. This was me 4 years ago, right? And I would look at this and I was like, okay, God, please, God, let price come down a little bit. And as soon as price comes down to break even, I'm going to see that my drawdown is at around $0. My drawdown is at $0. And now I start to say that, okay, as soon as price comes back into profits, I'm going to close my position and I'm never going to enter this trade again. So you're like, okay, let me just wait a little bit more. So once price comes down, you notice that the next candle starts to go back up again. When the next candle starts to go back up again, now your drawdown becomes negative 40. Right? Your drawdown becomes negative 40 and you're like, oh man, this is going back in drawdown. So then you start praying, you start calling your friends, you start doing some indicator analysis, you start to put on like stochastics and other indicators just to see if price is really going to go down. And once you come back to the chart, your drawdown from negative 40 goes to almost negative $100. And at this time you're like, oh wow.
I think you can annotate now. Sorry for. I think you can annotate. I just enable it from the settings.
All right, we're going to take a look at that. So once your drawdown goes to negative 100, at this time, there's no turning back. So when this used to happen to me, I was like, man, why is price moving up, going in drawdown, coming back at break even, and then continuing to go up? And when I started to look at this, I realized that, hey, wait a minute, maybe this, if this is resistance right over here, right, then maybe this is a breakout of this resistance, right? If this is a breakout of this resistance, it does not mean that I'm going to stay in a sell, because if this is a breakout, this also means that price is making a high right over here. And if price came down to break even, maybe this was a retest of the price which broke out right over here. And once we had a retest, it made sense for price to continue moving bullish, right? This happens to a lot of people. So let me see over here. Yeah, this happens to a lot of people like this, right? That you take a trade, price comes down and break even, you start praying that, okay, you know what, perfect, now price is going to go in profits, I'm going to close the trade, thank you God, I'm never going to do this again. And then price continues moving bullish. You're like, oh man, you know. So this is where I realized that, okay, you know what, it's really, really important to have a stop loss level. And before we even talk about having a stop loss level, it's really important to understand that if the candles are really printing in our direction or not, right? Because whenever price is coming up to a resistance right over here, you have to identify that, okay, if a candle is bullish, it makes no sense to take a sell, right? Because the bullish candle means there's a high probability price will continue moving bullish, right? If you want to take a sell, you want a candle to close bearish right over here. So let me color this red, right? You want a candle to close bearish, and then you want to take a sell. It's just like standing at a bus stop, right? Let's say you're standing at a bus stop and all the buses are going right. When all the buses are going right and you want to say, okay, you know what, I want to go left. Are you going to jump on the bus that goes right? Or are you going to wait for the bus that goes left? Right? Some people will jump on the bus that goes right, thinking that, okay, maybe somewhere down the road, the bus is going to make a U-turn and then go left. That's not the way how things work, right? Because you have to wait for proper confirmations, right? So whenever you're taking a sell at a resistance, you have to wait for candle to close bearish. And whenever you're taking losses, you have to identify that, okay, what was there something that you missed? So let me color this right over here, right? Perfect. So that's something we learned about break and retest, that, okay, if we're taking a sell at resistance, if price goes in drawdown, comes back down and break even, maybe that's a retest. We learned that. And we're like, okay, you know what, maybe next time we're not going to do that. And that's what happened. Next time when price hits stop loss, we're like, okay, perfect. We got stopped out. Now at this time, we're not going to take any more trades again. Let's see here. So annotation, meeting info, streaming, stop share, participants, video. Okay, there's still no annotation here. Okay, that's fine. Right? So that's how risk management is really, really key. The number one thing that we really changed here was to really managing risk. And managing risk means to make sure how to cut your losses short. You know, because when I first started, I was told that, hey, like, you know what, the best way to trade is to be patient with your winners and to be impatient with your losers, right? So that was a very simple concept. A simple concept was that whenever you're winning a trade, you have to be patient with that and let it run. We're like, okay, perfect. You know what? We're going to let it run. But whenever you're losing a trade, you have to be impatient with it and close it ASAP. But normally what happens is with new traders is that whenever you're going in profits, you want to secure those profits ASAP. A lot of guys, what they do is when trade goes in profits, they secure minor profits. They secure in like 2 pip profits, 4 pip profits, 5 pip profits. And whenever trade goes in a drawdown, you want to let that run. Why? You know, like a lot of times people will let their drawdowns run for a long time. You know, that's not the right way to do it. If you want to let your drawdown run, you have to manage risk. And the way we came up to that was like, let's say, for example, let's take out an example at, all right, so let me just bring up pound yen over here. And when we bring up pound yen, I want to look at an example where we can basically manage risk. And the best way to do that is going to be, let's see here. I really wish there was a way to annotate here, but I guess that's okay. We have the chart here, so we can possibly work with the chart here. So let me find an example here where we can basically see how can we manage risk. Okay, perfect. There we go. We can manage risk right over here. So awesome. So let's say price came down and we had clean traffic hits for left hand side, right? We had clean traffic hits for left hand side. We're going to draw a support at this time. And we're going to say, okay, you know what? Candle closed bullish, 15-minute candle closed bullish. which means a support is formed, and this support was respected, let's say, yesterday in the Asian session. So now there's a higher probability for the next candle to continue moving bullish. So let's say someone does this, they're like, okay, you know what? I'm going to take a buy right over here. I'm going to put my stop below support, and I'm going to put my take profit up over here. So now I'm going to have 1 to 2, okay, let's say 1 to 2 risk reward for me to have some profits. And you're using a lot size, which is, let's say you're using a 1 lot at this time. You're taking a buy and you're using a 1 lot over here. And you're like, okay, price is going to go up and I'm going to stay in this trade. Now, what happens is, let's say the next candle, it doesn't go bullish. Next candle goes bullish a little bit, and then the candle goes bearish, right? So when a candle goes bearish, what are you trying to do at this time, right? If you're in a buy position and a candle closes bearish, what's the probability that the next candle is going to go bullish? Right? You always have to think about this. Whenever you're in a trade and you have a candle that's closing against you, you have to identify that, okay, you wanted this candle to go bullish, but it's coming down bearish over here and it's closing bearish. There's a higher probability price may continue down to support, or there's a high probability price may start ranging, right? So now when you have the ability to close a position, this is where you have to be impatient with the losing trade. Because if this was a winning trade, this candle would have been bullish. But since it's a bearish candle and you have a 1 lot open, this is where you have to make a decision, right? And that decision is going to be, do you want to let the entire 1 lot open, or do you want to close half of it, close half, which has come up to 0.5 lot right over here, 0.5 lot at this time? Or do you want to close 0.5 and let the rest run? What's going to happen at this time is, now, let's say your risk in this trade was about, total risk was, let's say your total risk was $100, right? And when this candle closed bearish, you're like, okay, you know what? I'm going to close 50% trade right over here, which means you're closing 50-cent lot. So now you're basically reducing this risk down to, let's say it's going to be reduced to around $70, right? So now you've reduced your risk to $70 because now you're getting impatient with this, right? You don't trust this. You wanted this candle to go bullish, but it closed bearish. You're like, okay, you know what? I'm going to be impatient with this trade because Raja Banks and other people say always be impatient with your losing trades, and the candles are closing against you. So you're removing some risk off of the table. The reason why is because whenever we go in a drawdown, right, we get anxiety, we get stress, because a lot of people, they're counting on that trade to make some money, or you want to make some returns to some clients, or like, you know, you want to pay off some debt, or whatever the cause is, right? So whenever you're seeing that candles are printing against you, you have to be impatient with this. This is what I do. I'm going to remove some risk off of the table, because if price hits my stop loss, instead of losing $100, I want to lose $70, you know, or I want to lose $60. So whenever you're in a trade, you're constantly thinking, how can you reduce risk in that trade? How can, like, if price goes against you, what are you going to do to remove risk off of that trade? The reason why people get scared or they lose confidence in a trade, because they don't apply these concepts. These concepts are really, really important to reduce risk, right? Whenever you start trading, of course, you want to make gains, right? But we cannot control where price is going to go. The only thing you can control in the market is your risk in the trade. That's it. There's nothing else you can trade, right? Because now look, candle closed bearish, next candle went down, broke the low over here, and then continued down to hit your stop loss and go all the way down. If you did not manage your risk at this point, let's say you did not, let's say you kept your risk open, you lost full $100, you know. And if you're a new trader, you're going to say, oh, no, man, you know what? This will continue to go up, and you're going to increase your stop loss. Now, instead of losing $100, you may be in the bucket to lose, let's say, $200. You know, how does this make sense? Right? It makes no sense at all, because you had a confirmation for buys with this candle closing bearish. That confirmation was gone. It was all gone. You know, so, and then you have to identify, okay, how can I reduce my risk in the trade? When you start to say, how can you reduce risk in a trade? You're being impatient with that trade, right? You're like, okay, you know what? I'm going to be impatient with this. But on the flip side, let's say if price starts to go bullish, right? So let me remove all of this. And let's say, for example, price starts to go bullish, and what we want to do is we want to make this a solid candle over here. And for example, let's say price starts to go bullish. Now you have to identify that, okay, if price is going bullish, perfect. How much do I want to secure positions? Right? Sometimes what happens is that when price goes bullish, guys are going to say, okay, you know what? I'm in a 5 pip profit, or I'm in a, let's say 4 pip profit. So I'm going to put my stops at break even. Never put your stops at break even whenever you're in 4 pip profits or 5 pip profits. If you want to put your stops at break even, make sure you're securing some profits at that time. You know, a lot of time people make this mistake that when they go in a 4 pip profit or a 5 pip profit, they move the stops to break even. Candle retraces, stops them out, and then continues to go where it wanted to go. How many times has this happened to you? You know, we have around, how many guys we got here in YouTube? 230 guys and girls here in YouTube, right? This happens a lot of times. This used to happen to me a lot of times. You know, I put my stops at break even after 4 pip profit, and price would come down, stop me out, and then go on my way. You know, and then what I did was that, okay, hold on. You know what? If price goes in my way anyway, I'm going to let it run. You know, I'm going to let it run, even though if it comes back and drawdown, if price comes back and drawdown, you have to be confident enough that you will manage risk. You know how to manage risk if price goes in drawdown. If price goes in profit, you have to let it run. Let it run for about, 10 pips, 12 pips, 15 pips. Whenever you have clean traffic here, you're going to know how big your range is, right? So if you measure this range, it's like an 11 pip range up to like 17 pip range. You let it run. And whenever you want to secure profits, secure 80%, 70%, and put stops at break even. That's it. Nothing can harm you at that point. You know, whenever you put stops at break even, nothing can harm you at that point at all. Right. So managing risk. We also had a risk management webinar about like 2 weeks ago, and in that webinar we talked about how to really manage risk, looking at the candles. And there was like something like the same concept here, that you're looking at candles to close in your direction. That's really going to help you with that. Another thing is, whenever we're starting to trade, we have to work on risk management first, right? I get a lot of messages. Our team here working, they get a lot of emails saying that, hey, like, you know what, I'm blowing account, I'm losing a big amount in like a day or in a session. The main thing is because you're not focused on risk management. You're only focused on making money in trading. Money in trading is going to come afterwards, right? The first thing you need to focus on is to stop the bleeding of your account. That's the first thing you need to focus on. And I really wish all the gurus and mentors and all educators out there in the Forex space and social media and stuff, they would focus on how to manage risk first, rather than like, how to make the most money. Because that's, I think the whole view of the industry needs to change from, hey guys, come, let's make a lot of money, to, hey guys, let's learn risk management first and then learn how to make money. Because we cannot control where price is going to go. The only thing we can control is how much we can lose in a trade. Once you get comfortable enough, once you get disciplined enough to manage your risk in trades, money is going to come either way. Right? Because once you really focus on how to keep your losses small by looking at candles and, the way the candles breaks the highs and breaks the lows, then you're going to start to enjoy risk management. Once you start to enjoy risk management, your profits are going to go up. And another thing, let me see over here. So we still cannot annotate. That's okay. So let's say, for example, right? For example, we have a trader one, right? Trader one takes a trade on day one. On day one, he takes one losing trade, right? Day two, he takes another losing trade, right? Day three, he takes a winning trade. Let's say he takes a winning trade, right? And day four, he takes another losing trade. And day five, he takes another winning trade. Now, this is a very realistic expectation from a new trader, right? That you're going to have day one is going to be a losing trade. Day two is going to be another losing trade. Day three is going to be winning trade. Day four, another losing trade. Day five, another winning trade. So you have 3 losses and 2 wins. This is extremely realistic. That happens to a new trader, right? But here's the kicker. If you're taking a losing trade, right, and if you're not learning why you took that losing trade, let's say that same opportunity happens on day two. If that same opportunity happens on day two, you're not going to know what to do at that point. So you're going to take another losing trade, right? And then accidentally you win on day 3. And then accidentally you lose on day 4 and win on day 5, right? So you're not learning anything from the losses. So let's say you have trader number 2 who's going to take a losing trade. And after you take a losing trade, you're going to take a look at the chart and you're like, okay, let me investigate why this was a losing trade, right? Because believe it or not, these things are going to happen over and over again. I believe that the way market prints the same patterns over and over again is because it's being moved by human psychology, because it's what they say, right? The market is going to print the same patterns over and over again. And I believe that the reason why 90% people fail is because they make the same mistakes over and over and over again. So when you have a majority making the same mistakes over and over again, it's the reason why I believe that the market is printing the same patterns over and over again, right? So let's say you had trader 2 who took day 1. Okay, let me just make this a little bit bigger over here. Let's move to 32. Let's move to 40 over here. So you had day 1, you had a losing trade, and you look at that losing trade. You're like, okay, you know what? Maybe I'm not going to do that mistake again. Then day 2 comes, and you have a newer pattern that comes on, and you start to take another losing trade. And you look at this, you're like, okay, you know what? I'm going to learn from this. So you learned on day 1, you learned on day 2. Now, for example, on day 3, the same patterns happen. The same pattern happens that happens on day 1. Right. And when this happens again on day 1, you're like, okay, you know what? I saw this happen on day 1. I'm not going to make the same mistake again. And then you take a winning trade right over here. Right. And then a new pattern happens on day 4. And you're like, okay, you know what? I took a loss and I'm going to learn from this loss. And then you go to day 5. And then day 2 pattern happens on day 5. And then you're going to learn from that. And now you're not going to repeat that same mistake again. Right. But at the same time, if you're focusing on risk management, okay, here's the thing about risk management here, right? Let me see here. Okay, still no annotation. Abdullah, you're killing me over here.
I swear it's out of my head. I put it on. I don't know why it's not showing.
Yeah, you're killing me with no annotations, man. You know, I like to annotate with the arrows and squares and all that stuff. But anyway.
Sorry, my bad.
Yeah, no, it's okay. Let's say, for example, you're a break-even trader, right? Let's say your stops are always. Let me just bring up a text over here. So let's say your trading plan. You have a trading plan, right? And your trading plan is to have a stop loss of 15 pips and take profit of 15 pips, right? So most people will focus on this. Stop loss 15 pips, take profit 15 pips. Maybe they're looking at 1 to 2 risk rewards, so they're looking at 30 pip take profit here. Now, if this is your trading plan and you're following your trading plan here to the T, most of the time what's going to happen is that you will be closing your trades at break even, right? There's a time where people say, hey man, listen, I've been at break even for a very, very long time. I get people messaging me saying, hey, I've been at break even for about 2 years, 3 years. I don't know what to do. You know, my losses are same as my winning trades. When I win a trade and I lose a trade, it's almost like the same thing, right? But so this used to happen to me a lot of times too, that I'd be at break even all the time. And when I'd be at break even all the time, I would look at this and say that, hey, wait a minute, right? If my losing trades are the same as my winning trades, what can I do differently to make sure that my losing trades are smaller than my winning trades, right? What was the answer? The answer was to manage risk, to make sure how can I reduce my losses in, like, when I'm having a losing trade, right? How can I reduce my losses? Because here's the thing, it's very simple, right? If we use logic, right? If you reduce your losses, your winning trades are not going to increase. Your winning trades will remain the same. But overall, over time, what's going to happen is that once you start reducing your losses, your winning trades will look much bigger than your losing trades. Am I right or am I wrong? Right? Gulag over here, right? Our winning trades will always look bigger than our losing trades if we keep our losses small. So that's what I did. I'm like, okay, you know what? If I'm going to take a buy over here and price starts breaking the lows, maybe I'm going to remove some risk from that trade, because when you remove risk from a trade, you're removing anxiety from this trade, you're removing stress from the trade, and believe it or not, now you're losing less than what you anticipated to lose. For example, let's take a look right over here. For example, let's say you had a candle closing bullish and you're like, okay, you know what, candle is closing bullish. and I'm going to take a buy over here, and you take a buy at this point. And once you take a buy, your stop loss is down over here around, like, let's say your stop is around 10 pip stop here, and you're aiming for price to come up towards 148,500, and you take a buy. Right now, once you have a candle closing bearish, you know most times price is going to go hit your stop loss. Believe it or not, our viewers here, you guys are so smart. Whenever price goes in drawdown, you know price is going to hit your stop loss before it hits your stop loss, right? But you still stay in that trade. You're like, oh man, it's going in drawdown. It's going to hit my stop loss 100%. 100% it's going to hit my stop loss. And then it hits your stop loss and you're like, oh man, I knew it's going to hit my stop loss. So what you need to do at that point is, let's say you anticipated the next candle to go bullish. And when the next candle goes bearish against you, that's the point where you need to reduce risk, right? Let's say you had a 5 lot open at this time, right? You had a 5 lot open at this time. Your risk was around, let's say 10 pips, $500. So if you see a candle closing bearish, instead of having a 5 lot, you need to close half, right? Need to close half of the position. Let's do this to 24, right? So you need to close half of the position, because if you're closing half lot once this price closes bearish, you're removing certain risk from the trade. Because if price hits your stop loss right over here, instead of losing, let's say, $500, you may end up losing, let's say, $350, right? $350 at this point. Makes sense? So once you're closing 50%, once you have candle closing against you, you're taking some risk off and you're reducing your stop loss at that time. So you end up losing $350. Now your wins are always going to stay the same, right? If you're going to have a winning trade, 10 pip trade, 5 lot, you're going to win $500. But if you're managing risk, if you're removing risk off of the table, you're losing less amount. And that's the only way to, like, break that spell of break-even trader. Like, if you're a break-even trader, the only way you can become profitable if you learn to manage risk. If you cannot manage risk, you will always remain at break-even. It's going to get extremely hard for you to progress, and what's going to happen is you may start taking riskier trades, and riskier trades mean bigger losses sometimes, and bigger wins, they come with bigger losses. So it's really important to manage risk at this point. What else here? So people are probably wondering, like, how do you, close partial positions? So let me show you right over here. Right, if you have MetaTrader 4, closing partial positions on MT4, right over here. So you go over here and it's going to show you how to close partial positions. So you go to your MetaTrader, you right click your position, and once you right click your position, you're going to see this dialog box that's going to open, right? And then from here, let's say you have a 50-cent lot open, you can change it to whatever you want. You can change it to 25 cents, you can change it to 30 cents, and then you hit close, and it's going to close that amount. Right? That's the best way to close out partial positions. And overall, you're going to see that you're going to start to enjoy risk management. And when you start to really enjoy risk management, you're going to notice that your losses are getting smaller and smaller. If you don't know my Instagram, I think Abdullah has that in the description, or, guys are talking about that in the chat over here. You can go to my Instagram. You can look at my highlights of the trades I've taken in 2020, and you can really see how I've really managed to keep my losses really, really small. Because at the end of the day, the game in trading is simple. You have to keep your losses small. If you can keep your losses small, your winners are gradually start to look bigger and bigger, and then slowly you're going to become a much more profitable trader. I think we're waiting for Abdullah here to kind of open the floor here for some questions and whatnot.
Yes, hello Raja again. So I have a question that I note here. Someone's called Anthony was asking, if I made 2 analyses, I've made on 2 pairs, but didn't execute the trades, but I went as I expected. So it's 2 missed trade. So I call it a day, or I take other trades. If he didn't execute, he had 2 winning trades, but paper, I don't know, he didn't execute it.
Okay, so here's the thing. If you saw trades formulating, right? If you saw trades formulating, the thing is, When it comes towards trading, it's a very emotional concept here when you take trades, when you execute positions and stuff like that. And the reason why it's emotional is because your live money is at stake. And statistically speaking, psychologically, human beings can only make one or two emotional decisions in a day. That's very important, right? We can only make one or two emotional decisions, rational decisions, like to say the least. And when you see a probable trade happen and you don't execute on it and you miss the trade, that's a missed trade. You can't look for another trade, because in trading, here's the thing. We all come to trading to have independence of time, right? We all come to trading to have independence of time. That's a very strong concept. When people come to trading, they're like, hey, swing your life away or take one or two trades a day. You can make a lot of money in a small amount of time. But the thing is, most people, they don't want to spend less amount of time on the charts. Mostly what I've seen is like guys are going to be on the charts in the morning. You're going to be in the charts during grocery time. When you're at the gym, you're going to be at the chart. When you're doing whatever, anything, you're always going to be on the charts, right? You need to focus on a few hours of the day in the trade on the chart and just focus on one or two trades. If you miss those trades, try to see how you could have executed on those trades and then move to the next day. So whenever you have two missed trades or one missed trade, just call it a day and go back the next day. And the most important thing you can do towards your trading career is to always revise, always revise the session. That's what you can do when to do at that point. Always revise your New York session. If you're trading the London session, always revise those sessions. And that's what I do in my time too.
Okay, perfect. We have Ali was asking, what if I closed my position before my stop loss and then it drives into my take profit?
So what if you close position before the stop loss and then price goes to my take profit?
Yes.
Okay, that used to happen to me too. So I think the question is that when I take a trade and when price goes in drawdown, I get scared a little bit. I get scared because I think like, price, may hit my stop loss. I'm getting scared and I'm going to close my whole position. And once you close your whole position, price starts to go in profits. So that's something to do with lack of confidence, right? There's a lot of lack of confidence in that aspect. So what you want to do at that point is you want to reduce some stress in that trade. If you're getting scared that price is going to hit your stop loss, close out certain position, maybe close out 50% of the trade, close out 40% of the trade, so that you remove some risk from the trade. Because once you remove risk from the trade, now you can let the rest run. Because if you let the rest run knowing that, okay, now your loss is going to be smaller than you anticipated and price goes in profits, your confidence is going to increase in that trade. That's the whole deal. The deal is to have increased confidence in trades, right? So like, if you're getting scared, whenever you get scared, close out 40% of the trade, 50% of the trade, and let the rest run. If it goes to take profit, you're going to be like, okay, you know what? I anticipated this to happen. It went to my take profit. Perfect. Over time, what's going to happen is over time, you're going to start to close less percentage in a trade. And then you're going to start to let a bigger position run to your take profit because, you would have seen it happen a lot of times and your confidence is going to increase this way.
Okay, perfect. And there is someone was asking, Mr. Raja, I have problems with fake outs, a lot of fake outs in gold. How to deal with that?
A lot of fake outs in gold. How to deal with that? I think that's a very subjective question. When you're having fake outs in gold, you need to identify that, okay, let's say you basically need to identify what the candles were printing. So I don't know the exact setup that you're talking about. So what we're going to do is we're going to talk about this setup right over here, right over here, right? That, let's say you took a buy for price to go up. And actually, let's take a look on the 30-minute time frame here. Let's take a look on the 1 hour time frame. Yeah, I think the only fake out we can see on the 15-minute time frame. So let's suppose this is a higher time frame at this point. So when you take a buy at this candle closing bullish, right? Now you're anticipating for price to continue moving up, but price goes down and you get stopped out. Fake outs, there's no way to deal with fake outs. It is what it is. Sometimes when fake outs happen, it's basically I mean, it's just like when you play soccer, right? You play soccer and you're running and, someone dodges you and you're like, oh man, he dodged me. I don't know what happened. A dodge is a dodge. And sometimes price is not going to go your way. So when price goes against you, so this is what I do. Whenever you have, let's say, a buying bias, I will always give my bias 2 chances, right? So whenever I'm taking a trade, let's say I'm taking a buy and price goes down and stops me out, and then I'm going to say, okay, you know what? I'm going to give my trade another chance. And what that means is that I'm going to wait for another opportunity for price to continue moving up. Because let's say if I took a buy at this point and price went down, this means that price created some sort of a resistance right over here. Let me change this color here really quick. All right, so that means price created a resistance here and price went down. So what I want to do at that point is I want to see that, okay, can I get another opportunity to take a buy? So then I'm going to wait for a candle to close above this resistance and then take a buy for price to continue up. So whenever you get faked out, just stay calm. Stay very calm, just step away from the charts and just wait for another opportunity to take a buy, because if you have a good bias and price always goes to where you want it to go, always give your trade 2 chances. That's it, 2 chances. If one chance fails, you're like, okay, you know what? I'm going to wait for the next opportunity. If the second chance you give fails, then there's something wrong with your analysis. And then you got to go back to the drawing board and see that, okay, you know what's happening over here, because you need to be confident in yourself that, okay, you can lose once in a bias, but you cannot lose twice. If you lose 2 times in the same bias, then there's something seriously wrong, and you really gotta focus on see that, okay, why is my analysis wrong twice?
Okay, I have a question, but I couldn't understand from Khalil. Hi Raja, how would I tell the difference between a losing trade or a trade that I manage risk well and cut loss short? It's on YouTube. I don't know.
How can I distinguish between a losing trade and a trade where I cut loss short? I think that's the same question. I mean, if you have a losing trade, that means price hit your stop loss. And if price hits your stop loss, you got to go through smaller time frames and you need to identify. So let's say this right over here, right? This right over, if you're looking at this area at this point, so if you look at the time at the bottom, this says 1300 hours, right? So this candle closed bullish, next candle went bearish. So we're going to take a look at that on the 5-minute time frame here. So looking at the 5-minute time frame, if you look at the time, this is 1300 hours. So this is where price is coming down. So when the candle is closing bearish and you're in a buy, that's where you can identify that, okay, if a candle is closing bearish, maybe it's going to come down to a support and maybe it's going to stop me out. So at that point you can say, okay, you know what, maybe I'm going to reduce my risk. Maybe I'm going to take some risk off the table, because if it comes down and hit my stop loss, I don't want market to take away more than I want. It's the same thing. Look at it this way, right? You come to the market, right? You come to the market and you're a new trader, and every day the market takes more money from you than what it gives you. Isn't that right? That happens to a lot of guys. That used to happen to me too. Market would always take more from me than what it would give me. And I start to look at that. I'm like, well, this doesn't make any sense, because I'm here to make money. So here's what I want to do. I want to focus on giving the least amount possible to the market. So if I'm planning to give the market, let's say $100, I want to make sure that I don't let market take $100. I'm going to make sure that I let the market take $70, because I don't want the market to take a lot of money. I want the market to give me a lot of money. So whenever you have candles closing against you, that's your opportunity to kind of say that, okay, maybe I want to close partial positions. Maybe I want to take some risk off, because the worst thing you can do to yourself is to let your full position go in a drawdown. That's the worst thing you can do to yourself as a trader. Never, ever, ever let your entire position go in a drawdown. That's my number one rule. Whenever I'm going to go in profits, if price goes back in drawdown, you better believe I'm not letting the whole position go in drawdown. I'm not letting the market take more than I want it to take. So whenever I go in profits for about 5 pips, 6 pips, and price comes back to my entry point and starts to go in drawdown, boom, I'm closing 50% right there. Because then market can continue down and take more money from me. No, man, I'm not letting that happen. I'm closing 50%. I'm making sure market takes less than what I planned for it to take. So you got to focus on like, candles moving against you, and really focus on how to close partial positions when you go in drawdowns.
Okay, perfect. There's someone also asking, I have a question for you, Raja. How can you know if the trend is a small correction or a real strong trend?
That's a very subjective question. You have to look at the higher time frames. You have to look at what session you're looking at. I mean, one thing is you have to identify what time of the market you're looking at. If you're looking at the market at this time right now, if you're trying to trade, I know we have, how many guys we got here in YouTube? We have around 200 people in YouTube, and I'm 100% sure someone is in a position right now. Someone is taking some trades right now. It makes no sense at all because it's 2 p.m. here in New York. There's no volume. Like, think about this, right? When you come to the market, right? When you come to the market, you have to look at it this way. When New York opens, everyone goes to the banks. Banks open, institutions open, hedge funds are open at that time. Things are rocking and rolling. Orders are flowing in and out. But when it comes towards lunchtime, 2 p.m. right now, you have to identify at 2 p.m. people are going to have their lunch at this time. There's no volume at this time. Everyone's going home at this time. People are trying to relax at this time. So there's no volume. So if you're looking for trades at this time, you're going to get stuck over here, and there's going to be no volume, right? So when you talk about the difference between like a trend or like, if the trends are going to continue or not, you have to identify what time of the market you're looking at. Either you're looking at high volume time or you're looking at a low volume time. There's a lot of information we pointed out over here, and I'm going to open this website right over here for you guys. So if you go to dominionmarkets.com, I'm also going to paste this link here in the YouTube for everybody. I'm not sure if I'm able to paste this link. I'm not sure if people can see it. But if you go to dominionmarkets.com, you can go to education and best times to trade. From here, you can find out what times are there most volume in the market. And whenever you're looking for strong trends, strong trend will always happen when there's volume in the market, right? So look, pre-Asian, a lot of volume at this time. Asian Open, lots of volume at this time. Then we have pre-London, lots of volume. London Open, lots of volume. We have London Close, lots of volume. Then we have pre-New York, New York Open, New York Stock Exchange Open, right? These are the times when there's a lot of volume in the market. So if you're looking for like, trending market, or if you're looking for like trending moves with really high volume, these are the times when there's a lot of volume in the market. And also we also cover what pairs to trade with like, high volume in different sessions and different times. So this will help you guys a lot over here.
So when it will be live, when people can trade on
Dominion Markets?
No, in Dominion Market.
Oh, okay. So this is a platform that we're launching. We're waiting for some legalities to be hashed out by Metacode. It's probably going to take about a week and a half. Then you'll be able to trade on this. The only thing different with trading on Dominion Markets is going to be like it's like any other crypto brokerage, right? But the only thing that's different that we're doing over here is that we have incentives, right? And with incentives, what we mean is now whenever you take a trade, you pay commissions, right? Normally those commissions go towards the broker, and like that's the cost for you to take a trade. But here what's going to happen is whenever you take a trade and you pay commissions, right? So you'll be able to use those commissions towards certain education or towards magic keys, right? So let's say your commissions over the course of 3 months, 4 months turn out to be $500. You can use those $500 towards market fluidity. This is like a community we have where we like, teach guys how to trade, how to manage risk, basically. I mean, market fluidity is all about managing risk. If you can manage risk, you're going to get good at managing risk. Your profits are automatically start to look bigger and bigger. So that's what you can get. Or like, if you want to participate in magic keys, you can do that. So basically the whole incentive about trading on Dominion Markets is going to be that you can use commissions towards getting world-class education, or like, magic keys, or like, we're also working with some other influencers to get their education packages on there as well, so that people can really focus on learning to trade. Because the more you trade, the better you trade, the better a brokerage gets, right? So that's one of the incentives we have over here, but we're still waiting. It's going to take about like, I think a week and a half.
But perfect. That's perfect incentive.
Yeah, thank you.
especially when it's related to education. I have one last question. I think I won't take a lot of time anymore. If you close out 100% of your position before it hits your stop loss, you never let the whole position go and draw down. Why don't you just put your stop loss at that value when you enter the trade?
I'm sorry, can you repeat that again, please?
Yes, if you close out 100% of your position before it hits your stop loss, why don't you just put your stop loss at that value when you enter the trade? So you were explaining before that you don't let your position go into drawdown, and then you close the entire position if you feel that it's going down to the stop loss. So the question was, why don't you put your stop loss at that point at the beginning?
Um, the reason is, let's say you're taking a buy right over here, right? Let's say you take a long position right over here, and you're anticipating price to move up, and your stop loss is down over here. Now, let's say, for example, this candle didn't go up. Let's say, for example, we had a candle that came down. Hold on here. So let's say we had a candle that went down over here, and let's say this is a bearish candle, right? Let's say this candle went down, but your stop loss is right over here. You're not closing the entire position when you have one candle closing bearish. You're closing, let's say 50%, 40%, because whenever you close your entire position, I've seen a lot of people say that, hey, like, you know what, every time when I close my full position, price always goes up to my take profit. So that's what you're doing. You're not closing the entire thing. You're closing 40%, you're closing 50%, and you're leaving the rest run, right? Because the whole idea is to let your trade breathe, right? But whenever you're getting scared, you're taking some risk off of the table. That's very important. You're taking some risk off of the table in the event that if price does go to your take profit, you're still going to be in the trade. Even though that's going to be a smaller position, but you're still going to be in the trade, and that's going to make you feel better because you're like, hey, like, you know what? Even though I reduced the risk from the trade, price still went to my take profit and I was in the trade. And you're going to feel better about it because next time when that happens, and you're going to identify that next time, and maybe you're going to close less percentage at that time because you're going to say, okay, you know what? I saw this happen 4 times, 5 times, and there's a probability it's going to go to my take profit at this time. So that's why it's really important not to close the whole thing. Close 40%, close 50%, and let the rest run. Because let's say you close 40% or 50% right over here, and even then if price hits your stop loss, you're not losing 100% of your trade. You're losing maybe 70%. You're losing 60% of what you already risked. So that's still going to keep you in the game to have like smaller losses. And honestly, man, like, with time, the more you practice risk management, the thing is, you have to enjoy managing risk. If you can't enjoy managing risk, this is not going to work. And that means you have to enjoy taking a loss. Now, someone's going to say, oh, yeah, he's promoting to take losses, but losses are part of the game. If you cannot take a logical losing trade, you will not have logical winning trades. It's very important.
Okay, that's perfect. Raja, can I download the Magic Key software without having the Magic Key pad? And about the real account, do you advise to open an account with $50 for mastering emotion?
No, that's not going to work.
$50.
No, that's not going to work.
So, okay. So anyone have? Can you show your candle colors, please? It's nothing. Okay. So I think we are done here.
Yeah. One thing I want to say is also that so I think if the best way for people to get in touch with us is going to be through YouTube. So if you go to YouTube, you go to my channel over here. This is the best way to get in touch with us. So we have a channel called Wicks Don't Lie. We have live New York sessions every morning. Every morning at 6:30 a.m. Eastern, we do live sessions where we go through the New York session. If there are some trades, we call out those trades live. This morning we had a pound yen buy, we called that out. We also had a gold buy, we called that out too. So you can see we've been doing live sessions every day. So I think this is the best way for you to get involved, start learning the correct way, the easy way, basically. So I think participating in these live sessions that we host. I think this is really going to help a lot of people, like, change their whole mindset about trading.
It helps a lot. I'm the first one.
Yeah.
So
Appreciate it.
I started following your YouTube channel like since last July, and it really changed a lot. I had a problem with some risk management in my system, swing trade especially, but a lot of things are changing now because of this mindset that you gave us.
Yeah, no, that's awesome. Thank you, man. I really appreciate it.
Thank you for being with us, Raja. And I really want to invite everybody to check the link for the Forex Week. We have other speakers that they will be starting tomorrow, after tomorrow, and the day after. Make sure to follow Wix Don't Lie YouTube channel. It's one of the best channels I ever watched. And thank you for mentoring us for free, Rakil. It's something that's really nice, and it gives back a lot for a person who's doing this.
Yeah, thank you. I really appreciate it. So yeah, we'll see you guys there. And I guess we're gonna say bye-bye to everybody here in the Gulag, and we'll see you guys in the morning tomorrow.
Thank you so much. I'll see you tomorrow.
All right, thank you.
Thanks.